Good afternoon, everyone. My name is Mike Strozinski, and I'm Executive Vice President and General Counsel for the Massachusetts Health and Hospital Association. On behalf of the entire team here at MHA, I want to welcome you to today's webinar, an introduction to the Inflation Reduction Act's direct pay tax credit. A few logistics before we start. If you have questions during the webinar, please enter them into the chat feature as we are in a listen-only mode. The questions will come directly to us, and we'll do our best to address as many as we can by the end of the presentation. I also want to take a moment now to thank MHA's 2024 sponsors for their support in underwriting today's webinar, which is just one of many events we offer throughout the year to connect our members with leading experts on timely issues like the one today. I'm now pleased to introduce our speaker for today from the Commonwealth of Massachusetts, Bob LaRocca. Bob is the Deputy Director for Federal Funds and Infrastructure for the Commonwealth. He's well-versed in policy communications and strategic advising. He's also the founder and president of LaRocca Strategies, a consulting service with clients ranging from candidates for Congress to voting rights organizations and law firms. Bob, thanks so much for joining us here today on what I think is some very important information for our members, and I'll hand it over to you now to get us started.
Thank you so much, Mike, and to everybody. I'm thrilled to be here and excited to present on this topic about a really exciting program called Direct Pay. First, before I dive into it, I work for the Federal Funds and Infrastructure Office for the state, and what we are charged with doing is to go out and to coordinate and communicate about all different kinds of federal funding opportunities to cities, to towns, for the state itself, and for like private entities as well. And so when we talk about direct pay, it's a critical piece of our work because these are, I'll go into it more in a moment, but these are tax credits that entities can get for clean energy projects and investments. But I should be very clear that this is not just an effort being driven by our office alone. This is really a interagency, inter-office, across the state project, if you will, that includes other folks within the Executive Office of Administration and Finance, as well as the Governor's Climate Office, really leading the way on this. So with that, I'm happy to move forward with the next slide. Okay, so I will go through here what is direct pay. I'll go through a definition of it. I'll talk about what are the credits themselves, how you can act like what are the ones that can be leveraged for different projects. I'll talk about the amounts of the credits and then the opportunities to get what are called adders or bonuses that can really expand the dollars back from the IRS. I will lay out a process timeline that talks about how you essentially do the things you need to do for projects that were put into place in 2023. It will largely be the same process going forward, but with a couple of adjustments that I'll claim. And then we have a bunch of resources that we have made available on our website and in a final slide here. And very happy for this to be shared among the group, that all the links should be clickable. But please, reach out if you have questions about those resources. Next slide, please. Okay. So I like to joke that I'm a recovering lawyer, but here I am not giving any legal advice or tax accounting advice. The direct pay program is really a tax program that involves forms and details with the IRS. We're not here to give advice on that. We're here to just share information about the program, and we really advise folks that they consult their attorney or their in-house counsel or accountant for specifics. Next slide, please. Okay, I promise this is the one slide with a lot of text on it. But what is direct pay? So the Inflation Reduction Act passed under the Biden administration makes the largest investment in clean energy projects in history. A lot of people, I think, know that or know of it. What I don't think is as well known is that it's really a tax bill. a big chunk of that investment is really delivered through tax incentives. So under the IRA, so under the Inflation Reduction Act, for the first time ever, tax-exempt entities, all right, such as yourselves, but also governmental entities like cities, towns, the state, that don't owe federal taxes are able to receive payment in the form of full value of credits for building clean energy projects or making qualifying investments. That's when we say direct pay, that's what we're talking about. It is also known as elective pay. And to be clear, these incentives, these tax credits, have actually been around for a little while. They've just only been available to the private sector or to private taxpayers. But now they've been expanded out. So another way of saying this is, if you do the thing that needs to be done, you can file a return and receive a cash refund for those projects, okay? It applies to projects that were put into service. It's actually like a requirement that you actually put it into service starting at the beginning of 2023 and goes all the way to the end of 2032. So we like to say that this creates a decade, or maybe you guess a little bit less than a decade now, of tax opportunity. The Federal Funds and Infrastructure Office really works a lot in the competitive federal grant space, right? So federal government, federal agency comes out with a new program. It's competitive. You gotta like put a really detailed, big application in place. And even though it's maybe a great proposal, you know, federal dollars can't be given to everybody and it's competitive. And so you might not get the thing. What is truly special about direct pay is that there is no limit here to the amount of dollars that can be dispersed. And there's no competition. You do what's required, you file in a way that ticks all the boxes, and then several months later, you get a check back from the federal government, right? So that's what really makes this special, and one of the reasons why we're doing our best to amplify this to everybody that we can. Next slide, please. Just so are tax-exempt hospitals eligible as well? Yes, absolutely. If you are a 501c3, if you are tax-exempt, you are eligible for this, just in the same way as city, town, or the state is. I won't spend a lot of time on this slide here. We are taking a four-pronged approach to direct pay. I mean, the first one is us trying to figure out what are the projects that the Commonwealth owns and is put into service for 2023, for which we can file in the coming months. The second is what I'm doing here, like providing actionable guidance to you all, including cities and towns. The third and fourth bucket are really kind of forward-looking. I will mention them. I'll mention three towards the end here, but really thinking about how, look, like this opportunity exists for a while. Try to start planning and thinking about a way that if you have capital projects that you want to do, if you're a hospital and you've been wanting to put solar panels on your roofs as a cost-saving measure, thinking about how the direct pay credits can be baked into your finance plan for that project, right? And then 4 is a little bit more for cities and towns, but we are trying to think about some creative ways that we, as a state, can provide some startup lending to folks to kind of spur these projects. Next slide, please. So there's a dozen credits, but there's really about 4. And this slide, we say most relevant tax credits for municipalities. It really applies to any tax-exempt entity. You know, building refueling stations or converting your diesel cars to electric vehicles, those apply. Probably going to be less relevant for you all, although it's possible if you are building in, you know, an EV charger, you know, in a parking lot that this would apply. But there's also credits that you can receive for producing energy, and this is called a production tax credit. It's not going to be as common as the other, quote, investment tax credits, but those are available too. The one that we talk about the most is this gray box here, Section 48. the energy investment tax credit, which would include putting solar panels on roofs or geothermal heat pumps if you're building out a wing of your building that would qualify. Next slide, please. Okay. So there are some complications to the credit amounts. I'll try to make it as clear as possible. The most common credit is this investment tax credit. And for that, you get a base credit of 6% of the project cost back in the form of a credit. I'll talk a little bit more about bonuses in a second. In case you're curious about vehicles, new vehicles can, if they're light, like under 14,000 pounds, you get up to $7,500 back. If they're over that, you can get up to 40,000. Those are the baseline credits. Next slide, please. But again, what makes this legislation or this law or this program really special is there are like other ways that you can add on and get bonuses. I'm not going to talk about low-income communities or energy communities, those first two columns there, or the fourth column about domestic content, just because it's very complicated and it applies to cities and towns using US created steel. But just so you know, there is a 5 times adder for projects that use prevailing wage and meet apprenticeship requirements. If the amount of the energy created is below a certain amount, you don't have to use the PWA, and you can still get the 5 times bonus, which would be 6 times 5, 30. And this applies to both ITC and PTC rates, but you should be aware of this for your planning purposes. Next slide, please. Okay, so I go through an example of a project here. This is for a municipality, but again, the direct pay applies to all tax-exempt entities equally, right? So let's say you are a municipality that is a brownfield, has brownfield status, which means it's an energy community. You install a solar panel, with energy storage on one of your municipal buildings. You would be eligible for this Section 48 ITC credit. Humor me by just saying, I'm not a math person, so we'll stick to a simple number of a $2 million project, right? Probably on the high end here, but you can see what this, like the effect of this is. So for this $2 million project, because of the base credit and then the bonuses, you effectively take a $2 million project and slash 40% off that cost in the form of a rebate that the entity would get to recoup. You do have to obviously pay for the project, but you get the 40% back, right? So this is why this is such a tremendous opportunity in terms of being able to plan out clean energy projects for the future. Okay, next slide, please. Okay, so the first question that you want to ask yourself here is, well, did we do projects in 2023 and put them into service, right? That's kind of like the first question. The IRS makes this is a little bit complicated. In some ways, it's good. The IRS is trying to be flexible. In some ways, it's just like a little bit clunky. I'll try to spell it out here. The IRS is allowing filers, so that can be you all, cities, towns, the state, to decide whether they want to file for these tax credits according to a calendar year or a fiscal year. Okay. What I've set up here is the decision to go with a calendar year, because that is the way that you can get or count projects that were put into service in the first half of 2023, right? But that's the first thing. You want to, after you decide whether you've got any projects, you think you might have any projects, deciding like your filing date, really, or how you're going to file, then consult legal counsel and tax advisors. We're right in the window of time now that you can be using. And again, this is just for 2023, right? This opportunity goes all the way to 2032. where you want to really be identifying the projects that were put into place in 2023 calendar year, gather the necessary information for each qualifying project. Again, we have some resources and things that you can click on. Lawyers for Good Government has put out a ton on this that can help you understand what that information is for those projects. And then the IRS being helpful gives everybody like an automatic, you don't have to do anything 6-month extension for filing. So if you were filing for the calendar year of 2023, you actually would have had to put those forms and send them into the IRS by May 15th. I used to work in the nonprofit space, so I'm sure many of you know what I'm talking about with 990 forms or have heard of that. But you get an automatic 6-month extension here. The tricky part is that the IRS wants you to actually pre-register with them for any of the projects that you've done about 120 days before you file, right? So if you kind of go forward to November 15th, which is that automatic extension date, walk it back, 120 days, you get to about July 15th. I think it's actually July 17th. This is not a hard and fast deadline. There was some confusion about this. We reached out to the IRS. We got some clarity. It's just a recommended date. However, we advise the best that we can, right? Again, this isn't tax or legal advice. You don't want to let this go until like November 10th, right? You want to try to get it done as soon as you can. And then I put down here, these are just the forms that you would need to file. Next slide, please. Okay. So thinking about like beyond 2023 filing, what we recommend, and again, this is to cities, towns, to museums, to tax-exempt hospitals, such as like start thinking about we're basically halfway through 2024, right? So begin to like build an internal team to work with the financial advisors, figure out what questions you've got, but then start to think about next year's timeline. You're not going to have that 6-month extension next year. So if you want to file for the calendar year of 2024, you would need that deadline for that would be May 15th, right? So just sort of like factoring all of that into your future planning. 2 and 3 are a little bit more for cities and towns, but I think they apply here, right? Think about your capital needs over the next decade, right? And how you can build in these credit values into that planning. And we've been also talking to folks like a lot, we get some really good feedback saying, make sure that architects and designers and facility managers are like aware of these opportunities as well. And then, make a plan for how you're going to get your dollars back. I think this applies a little bit more to cities and towns because you're going to get a check back, to like say the town of Milton, right? And like there's been some question about, well, does that go into our general fund or can we put it into like a separate fund? We can't actually advise about that. But if you're trying to figure out about like which account or how it's going to be received, start to begin to think about that and make a plan for that as well. Next slide, please. Okay, so here are some resources. I want to direct you to the first bullet point there. FFIO has curated a bunch of resources and put them, as many as we can. We update it as best as we can on our website. We've laid out a few of them here. There are some really great webinars that like you can watch to actually get a handle on some of the specifics. The IRS has put out a video tutorial on pre-registration and how you do it. I will say, sometimes I click on it and it doesn't work. I know it exists because I keep going back to them and like, there's some explanation there. They've also put together like a helpful page on Q&A, so some common questions. And again, sorry, fourth bullet here, like mentioned, Lawyers for Good Government. They've got a ton of resources, and I think they're going to be doing even more support going forward. So with that, I think I saw a few questions in the chat. I'm happy to take any questions you've got. Yeah.
Thanks, Bob. I'd like to remind folks watching, if you do have questions, please put them into the chat. We've got a couple here. The first, go from the bottom first around the pre-registration, if that's on a project by project basis or
Yep.
whether it's by tax identification number.
Yeah, great question. So it is so let me see if I can answer this correctly. The IRS requires that you own the asset for which you are seeking to get the credit. So you would do it by EIN, and then in that pre-registration, list and provide the relevant information for each project. Let's say you did one. You would register, as you, the owner of the asset, and then you'd put the information for that specific project. If you did 2 or 3, you wouldn't register multiple times. You'd register once, but you'd have in that registration process each of the projects listed.
So looks like address it. And the prior question, basically, if there are other reimbursement reductions, how should entities be calculating what their recoupments are here when taking into account other reimbursements they're receiving for the projects?
Yep. Okay. So this gets a little bit into the weeds, but the IRS has a rule that says you can't cover more than 100% of the project with federal dollars. It's called the excess benefit rule. Pretty obvious, right? Like, and this applies to like a lot of cities and towns will like apply for, EV fleet conversion. They'll get that grant from the federal government. And the question is, well, then can they, for that project, for that conversion, also get direct pay? The answer is yes, but you can't, it is limited to the cost of the project. So you can't get like 110% of the project cost in federal dollars. That makes sense. There are, as far as we understand it, no other limits other than one, I will say, like if you're getting dollars from other places, that's not going to count against it, and you can access it up to as much as you want. You do have to take a 15% haircut if you use tax-exempt bonds to cover any of the projects. So there would be a slight reduction there in the bonus. But as far as we understand it, even if you're using, say, state dollars, maybe you've applied to the state for some kind of grant or other philanthropic dollars, whatever it might be, that would not count against what the credit that you could receive would be.
A new one posted here. Looks like how does your office support hospitals in assessing potential energy upgrade projects for direct pay?
So we're charged effectively with supporting, giving advice across agencies, state agencies, and cities and towns. However, we are always welcome to answer any questions you have about whether you've got a project that might qualify or you think you want to do some sort of a clean energy investment. You can reach out to our office. If we don't know the answer, we can easily connect you to somebody in the Executive Office of Energy and Environmental Affairs or in the Governor's Climate Office to help get you some clarity there. But, and I know Tim on the call here, Tim Devon, great partner of ours too, that I'm sure can be of assistance if you have questions about clean energy projects.
Great, thank you. And I can answer this one. Will the recording be available? Yes. Well, that will, I think, be sent around and posted on our website. New one, is there any type of organization that is not eligible for elective pay?
Great. So short answer is I'm sure there is something. They don't make it 100% applicable to everybody. We are not specialists, though, in how the credits work for non-tax exempt entities, so private companies or taxpayers. I imagine there are some carve-out exceptions there. But as far as we understand it, if you are a tax-exempt entity, you are eligible for this, right? And so that doesn't matter what you are, right? Like if you're 501c3 or you're a public authority, whatever, you would be eligible.
Right.
there's no carve out or exception there.
Thank you. Well, no other questions popping up. I really want to thank you for bringing this to us here today, and I think this will be the start of a continuing conversation.
Yep.
The governor's office and HHS have been tremendous partners to the hospital community, and we've really appreciate that open dialogue that we're able to have with you. So this was a great overview of this program. I know we'll probably be getting additional follow-up questions from our members, and we'll try to create some different forums, hopefully to engage you further on this and your team, Bob. So thank you very much for joining us today. And before any viewers leave, I'd like to point out a recent MHA advisory on the hospital climate sustainability work group we're pulling together. The work group will be a forum for both advising MHA on policy matters and also information sharing amongst hospitals on a wide variety of related topics, including the one Bob just shared with us. To date, we've got about 17 hospitals that have appointed representatives. We're hoping to get even more around the table. If you got any questions, please reach out to myself or Linda Alexon, whose contact information is here. And then finally, all of you watching today, thank you. Scan the QR code on your screen now to see all of MHA's upcoming educational program. We have several events coming this spring and I should say summer, I'm sorry, now that we're into June, and we hope to see you again soon. I hope everybody has a wonderful afternoon. Thank you.
Thank you very much, everybody. Thanks, Mike.